Hello and a warm welcome to South Central, your one-stop shop for everything making news in South India. This is the business news bulletin you need to be watching to keep pace with stories from the worlds of business, politics, policy and more as we continue bringing you comprehensive coverage, news, corporate updates and exclusive interviews from the 5 southern states. My name is Jude Sanath and these are the headlines we're tracking at this hour. Tamil Nadu was one of India's fastest growing states in 2024-25, reveals RBI data. The state registers a nominal growth at 16%, with parameters like number of factories, workforce participation, and exports trumping second-placed Karnataka. In an exclusive chat with ET Now, Shriram Properties Chairman and MD Murali Malayappan says the developer is on track to closing FY26 at 3,000 crore rupees in total sales value. Andhra Pradesh charges the highest VAT on petrol and diesel, says Petroleum and Natural Gas MOS Suresh Gopi. The state registers highest fuel prices pan-India, while the Andaman and Nicobar Islands see the lowest fuel prices in the country. Karnataka has recorded 2,809 farmer suicides in the last 3 years, says the state's agriculture minister to the Legislative Assembly. The government points out that the number has been declining since 2023. Chennai-based Intellect Design Arena tells ET Now its deal funnel has already crossed 12,000 crore rupees, indicating strong medium-term revenue visibility. And as Bengaluru-based deep tech-focused VC firm BYT Capital plans on deploying its 180 crore rupee early-stage fund, its co-founder speaks exclusively to ET Now on where this money will go and which startups are on the radar. That's coming up next. Right, our top story first. Bengaluru's BYT Capital, a deep tech VC fund, has announced the launch of a 180 crore rupee Category 2 fund. The purpose of the fund, the company has said, is to support founders building scientific and engineering solutions, or in other words, deep tech innovations. BYT expects the fund to close by the third quarter of 2026. It's backed by a network of HNIs with investment interests in India, as well as family offices that view deep tech as a high-impact asset class. Now, this is how the math adds up. BYT Capital will deploy funding across 18 to 20 deep tech startups with initial ticket sizes of 3 to 6 crore rupees per startup. Nearly 55% of the corpus has been reserved for follow-on rounds. One might say BYT Capital has a rather happy problem of plenty on its hands. After all, both Chennai and Bengaluru have seen an influx of deep tech startups in recent times, with Chennai's existing ecosystem perhaps a touch ahead thanks to the presence of incubators like the IIT Madras Research Park that focus on the sector. So with the new fund doing the rounds, it's a win-win really for startup and startup investor alike. To speak to us about where this money will go, which startups are on the radar, and the X factor behind being picked for funding, I'm now joined by Amit Chand, co-founder at BYT Capital. Amit, firstly, thanks so much for joining us on the broadcast. My first question to you, how many deep tech startups does BYT Capital have on the radar for the deep tech fund? Which are these companies and what makes their work so interesting?
Sure. First of all, thank you so much for having me here, Jude. Yeah. So in terms of scale, if I talk about, we come across around 500 to 600 deep tech companies annually. We actively track close to 50 to 60 at any given time. Of these, typically 20 to 25 in deeper diligence, and only 4 to 5 makes it to the final investments, right? So on which companies, I will name only the one which that's public. That is Vium IC. We have backed this company because it's building foundational infrastructure of resilient precision, navigation and timing, which is important for India's strategic reliance, self-reliance. coupled with significant commercial opportunities. For the others, without naming them, we are looking into robotics, faster drug discovery via AI, and clean energy pathway through nuclear fusion.
Right, sounds good. So, how many companies do you hope to have in your portfolio by the time this round eventually ends? And is that 3 to 6 crore rupee average ticket size per company open to going perhaps a bit higher? Or what's the outlook on that front as well?
Right. So Fund 1 is designed to back around 18 to 20 startups over 4 years. So effectively 4 to 5 companies per year for next 4 years, right? So we typically invest between pre-seed to Series A and a technology readiness level of 3 to 7, which means that science is validated and startup is ready for the next phase of engineering and pilot. So initial check size will be somewhere around 3 to 6 crore rupees, but we have structured the fund with 55% reserve for follow-on on the winners.
Just now, Chennai was the deep tech startup capital, one might say, thanks to the presence of IIT Madras in the city. But Karnataka has caught up too. In fact, the state has already stated its focus on the deep tech ecosystem, thanks to that startup policy and the government's, the government really putting it out there that deep tech will be a priority area for it. So, are you faced with a nice, happy problem of plenty when it comes to focusing on deep tech, given what one might say is a possibly abundant availability of supply both in Chennai and Bengaluru?
So very interesting question, but yes, the competition has increased, and in our view, it's a healthy sign that ecosystem is growing, right? But that's not a problem of plenty, if you ask me. It's a must-have for making India a globally competitive market, building technology for the world. Today, if we talk about, we have around 3,600 deep tech startup across the country. And what's different this time is that the ecosystem isn't driven by the private VC alone. State and central governments are now very actively participating. Institutions like Technology Development Board, DST, and programs like IDEX and Space are doing more than just writing the checks for these guys. They are enabling access to test beds, infrastructure, and early customers, right? Like you mentioned, Karnataka and Chennai, but we are seeing that other geographies like Maharashtra, Gujarat, Telangana's are catching up too. So if you ask me, both in India, geographically and institutionally, deep tech is no longer confined to one or two hubs. It is becoming increasingly distributed, which is precisely the direction you want us to see. Yeah.
Right, Amit, very quickly and without divulging too many names, because I know you can't at this point at least, what are some of the most interesting tech that BYT is the most excited about in terms of the fund itself? And as far as these companies and their tech are concerned, how will it help impact lives?
So we like technology that are hard to build, deeply defensible, and massively enabling, right? The kind of that create entire new capability layers for industry and society. So few of the focus areas are space and aerospace systems, which we are looking into, defense aligned with dual use technologies, robotic and autonomy, AI for life sciences, clean and alternative energy, synthetic biology, quantum photonic and advanced material are on our checklist.
Right. And what's the future funding pipeline looking like at this time and place, Amit? Where do you go from here? 180 crore rupees, no doubt, is a big splash in the deep tech pool. But what's the future looking like in terms of funding?
So over the next 12 to 14 months, the focus is primarily on maintaining a very disciplined, steady pace rather than accelerating deployment. So we are focusing on backing the right company at the right point in their technical journey. And that's how the next future pipeline is look like.
Well, the right company at the right time and hopefully with the right kind of funding as well. On that note, Amit Chand, great speaking to
Yeah.
you. All the very best for that fund
Thank you
itself
so
and
much.
netting some very cool deep tech startups with the solutions that we'll look out for as the future rolls by. Thanks so much for joining us on this broadcast of South Central. Right, speaking of Chennai versus Bengaluru, it's Tamil Nadu versus Karnataka. On Tamil Nadu, in fact, as far as the industrial ecosystem itself is concerned, in fact, the latest RBI stats has Tamil Nadu growing at a nominal rate of 16% in 24-25, which is of course one of the fastest among other Indian states. Growth here was largely driven by sectors like manufacturing, services and agriculture, and all of this as per data from the Reserve Bank of India. Now, these stats also say that Tamil Nadu outperformed its nearest rival Karnataka by a significant margin. For instance, the state has far more workers and factories when compared to Karnataka, while its export value of $52 billion was also significantly higher to Karnataka's $35 billion in the 24-25 period. Experts have now pointed out that these numbers are also a telling sign of unresolved gaps in Karnataka's industrial employment, manufacturing, and overall socio-economic indicators when compared to its neighbor to the southwest, which is of course the southeast rather, which is of course Tamil Nadu. Now, just ahead of elections, the data also comes as good news to the DMK that is seeking re-election since winning assembly polls back in 2021. Moving on to news from the real estate space now, Shriram Properties Limited is on track to closing FY26 with a total sales volume of 3,000 crore rupees for the fiscal. In an exclusive chat with ET Now earlier today, the company's chairman and MD, that's Murali Malayappan, told me that not only is the company on track to touching this 3,000 crore rupee mark this fiscal, but is also expecting sustained growth through the next calendar year as well. The Shriram Properties boss also said that the office space and data center market could double their growth in the new year, but Shriram Properties will continue to focus more on the residential segment. Here's a slice of that exclusive conversation.
Calendar year 2025, one of the great years, and we have also seen some good reform Government of India has brought in, including GST reform. Right. So quite a lot of good things happened, and government also has been bringing new reforms time and again, both state and central government have been competing and providing, right platform for the businesses to grow. 2025 was good. For FY26, we are on the right path today as an organization. We looked at close to about, last year we closed the sales about 4.2 million square feet with about 2,200 crore sales value. This year, we're expecting close to 3,000 crore sales value with about 5 million square feet. That's a jump we are looking at. We are on course today. We are on the right direction today. We are now almost end of 9-month period. We are on course to reach our numbers. It is not only this, FY26, I anticipate next 5 to 7 years time, there's a clear visibility for the growth as a nation and housing as or real estate as an industry. There is a clear visibility of growth at least for the next 5-7 years.
And speaking of that visibility of growth, like you so rightly bring up as well, what does that do to your launch pipeline? I know for a fact that for a while you've been banking on big developments, much like the 57-acre one that we're doing this interview in for the moment. But where will your launch pipeline go from here right now, given that visibility of growth that you see over the next half a decade and even beyond? What is that launch pipeline for Shriram Properties looking like?
For the next 3.5 months time for this year, we still have another 5 projects to be launched. 2 in Chennai, 2 in Bangalore, 1 in Kolkata. So 5 projects are likely to be launched during this financial year, rest of the financial year, with about 2.7 million square feet. For the year, close to about 4.2 million square feet is the pipeline, 1.5 million square feet launched. Collectively, the GDV is close to about 3,000 crores. So that's in very good shape. FY27, we are preparing now what all the launches to be done. This is done. This is only a autopilot mode now. We are going to it. For FY27, we are preparing for a much, much bigger growth.
Right. And what are those preparations like? Which areas will you focus on? For example, the numbers that we've been looking at least from the property consultants, tell us there is a clear shift to premiumization when it comes to real estate. The premium to luxury segment has been doing well. You're seeing continued sluggishness as far as affordable, low-cost housing is concerned. Is there a direction you will be taking as well? More premium to luxury projects, the upper end of the price spectrum, so to speak, as far as FY27 goes?
It is very unfortunate you mentioned about affordable housing and economic weaker section housing. It's very unfortunate as a nation we are failing to provide supply to affordable housing and the economic weaker section. Government should take a serious look into it and address the problem. What we have seen in Indigo fiasco, there was no supply. It was not anything else. We can attribute one issue. There are not many suppliers which created problems. Not all other things are, just the process. Similarly, equivalent to Indigo fiasco, if you take, there is no supply on affordable housing and economic weaker section. If, as a nation, we do not address that, it can lead to social unrest. It's a serious issue.
Right.
Anyway, that's a larger issue. Nation has to address, government has to address, everyone together have to address, society has to address. As an organization, we are looking at positioning ourselves as a mid-premium segment. That's where the aspirational urban customers are looking at, fulfilling their aspiration, and there is a strong desire and as well as demand. And we expect that demand in that sector is likely to remain very firm, at least for the next 10 years. So because the middle class become upper middle class, lower middle class become middle class, upper middle class becoming HNI, there's a natural transition has been happening in the last few years. Hence, the people are also looking at, if somebody wants a 2-bedroom, they are looking at a 3-bedroom. Somebody wants a 3-bedroom, they are looking at a 4-bedroom. Somebody who is looking, already has a larger house, they are looking at little better house today. That's a change which is taking place. Our own client profile, we have got close to about 50,000 clients who have bought homes from us, and their aspiration level has gone up. And Shriram as an organization in the industry is the best from the referrals or the existing customer buying second home, or their relatives and friends, one of the best in the industry. So we just want to stay focused to be with our same client base and look at how do we meet their additional aspiration today. So we will stay firm on upper middle class community. That's where the mid-premium segment, that will be our focus, and that's where the next 10 years is lying.
Absolutely, mid to premium it is. And speaking of FY27 itself, what is your outlook on how many units will hit the market in the residential space? Do you have some vision on that front?
We expect to hand over FY26 about 3,500 units. 27 at least it will go up by 15-20%. And we are not set numbers for FY27 yet. It's all in the preparation, but it will be far superior to FY20.
Right, that's great promise of growth on the residential front. Let's quickly shift focus to commercial in a sense, Mr. Murli. GCCs have largely been a key growth driver in office space real estate, which has largely outperformed in 2025, especially in cities like Bengaluru and Chennai as well, two big GCC magnets in a sense. Do you expect this trend to continue into the new year as well? And if yes, how are commercial portfolios and developers, much like yourself, going to shape up with regard to this promise?
The trend is not likely to continue, it's likely to double. I see a bigger growth which is taking place in the commercial office space and also in data centers. Chennai is the place. I see a big growth which is likely to take place. But Shriram Properties as an organization will stay focused on housing, particularly mid-market and mid-premium segment. That will be our primary focus. Maybe about 80-85% of our focus will be there. And 10-15% focus will look at some office space and all that.
It's interesting that you're saying that, and there's a clearly outlined focus there, but when you see so much promise in commercial spaces, and when you see GCCs largely powering the office space market, why not go out there and take a little bit more of the pie for yourselves? 85-15, no doubt, is a healthy mix, but surely you must be a bit more ambitious on the office market front, given all these growth drivers?
As a real estate enterprise, on this residential one, your IRR is far superior. In the office space, it's all rental yield base. So you should have the asset class mix, but as an organization, we feel that it should be more towards a residential segment. And also, we also carry a corporate responsibility to serve these nation's need today. We are not able to serve the needs of in the affordable housing segment, unfortunately, because it's not profitable. Environment is not conducive. We would like to serve. Otherwise, if you look at, if you are not providing housing in the mid-market and mid-premium segment, the aspirational clients will get into urban slum, which is not good. India is a developing country. If we need to become Viksit Bharat by 2047, we need to have developed in all aspects, including the standard of living of our people. People cannot be living in urban slums. So we need to take responsibility for giving a better standard of living, which is, we should not only look at commercial aspect and money-making aspect, we should also look at our responsibility of how we can shape up this country in a much better way, which will ultimately lead to Viksit Bharat by 2047. Hence, our primary focus will be this housing, particularly making sure that the standard of living and quality of living is becoming better and better for the people who are living in this.
Right. So that 85-15 ratio looks likely to stay for the foreseeable future. But I have to ask you about data centers. Almost all reports that were out this year have pointed to data centers being a primary focus area for a number of real estate developers. Also from a growth standpoint, especially in Chennai and Mumbai, two cities that have seen the most promise in terms of data center investments and operations. The numbers also don't lie. The inventory infusion is to the extent of 260 megawatts this year alone. Absorption has also taken place, 190 megawatts this year, on overall 400 megawatts in IT assets absorbing data center inventory. Surely developers must be looking at the data center market as a prime opportunity. Would you count yourself as one of them? I know for a fact that your focus is on residential, but surely it must be at the back of your mind in terms of entering this asset class too.
We are watching the market. Morning only somebody sent me some news information. US, the current energy supply in 2035, 34% of the current energy supply will just go towards data center AI. So that's the consumption which they are expecting. What does it mean to economic growth? What does it mean to employment generation? I'm not getting into it. So that's where the shift is becoming. And Chennai, Bangalore, Kolkata, these three are the centers. People are looking at setting up data centers. We have been observing this. We have been in touch with the market. We've been in touch with the data center operators. They've been talking to us on what all happening now, and also looking at opportunities where all we can do. We'll be very, very opportunistic in this.
Well, the future looking bright there for data centers and GCCs, but a property developer like Shriram Properties Limited will continue to keep focus on the residential space. That's the word coming in from Murali Malayappan there, who says that 3,000 crore rupees by way of total sales volume is well and truly on, by the close of this fiscal. Moving on to Andhra Pradesh now, as fuel prices continue to vary sharply across the states, Andhra, it seems, has the most expensive petrol and diesel in India. In a written reply to a question in Parliament, MOS for Petroleum and Natural Gas, Suresh Gopi, has said that Andhra Pradesh has the costliest petrol and diesel in the country, mainly due to the VAT on petrol in the state. That's just above 29 rupees to a litre, VAT alone. This makes petrol in a city like Amravati as much as 109.74 rupees a litre, while diesel here costs at about 97.57 rupees. At the other end of the spectrum is the Andaman and Nicobar Islands, recording the lowest fuel prices, with petrol costing just about 82.46 rupees to the litre. Shifting focus back on Karnataka now, 2,809 farmers in the state have died by suicide since FY24. This, of course, is according to statistics by the state government. Replying to a question by BJP MLA Arvind Velad, Karnataka's Agriculture Minister N. Cheluvarayaswamy said that while 1,254 farmer suicides were reported in FY24, that number came down to 1,178 the very next fiscal. FY26 so far has recorded only 377 farmer deaths till date. The minister said that while the state accounted for the second highest number of farmer suicides in the country, that number has firmly been on the decline. Back to news from the corporate space now. Chennai-based Intellect Design Arena has reported 18 new deal wins in Q2 of FY26 and nearly double of that for the first half of the fiscal. In an exclusive chat with ET Now, the company's management also said that the deal funnel was valued at about 12,000 crore rupees, which is a clear sign of revenue visibility for the medium term. Here's a slice of that conversation.
These credit unions are looking to attract millennial customers. So our platform, we are bringing some unique services in this platform, like family banking, social banking, and many other things, which will help the credit unions to attract their members. So our funnel is improving. It's going quarter by quarter, but I would like to qualify the funnel into various sub-components. I think we have a funnel which has got large deals. We also have a funnel from a credit union perspective. And since we are talking about credit union, let me just share some data around credit unions. For example, I don't know if you remember, but in August of 2025, the National Digital Banking Working Group, which represents 55 credit unions in Canada, had announced that they have chosen Intellect as a preferred vendor. So from that perspective, we are looking at a significant pipeline, both from a credit union perspective as well as our other deals which are progressing very well.
Well, happy days then for Intellect as that deal pipeline stays strong for the foreseeable future. And with that, it's a wrap on this episode of South Central. Thanks so much for watching. Keep staying tuned to ET Now for more news and updates from markets and beyond. For the moment, it's goodbye from us.